Hello, 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 you guys. I am super excited. Today, on this episode of RoQuanda's Real Estate Real Talk, I am talking to Alex Otero with PRMG. He is a senior loan officer. And today, we're going to talk about what a lot of people get confused about is the closing costs. People want to know, what are the closing costs? What are the closing cost fees associated with it? Is this closing cost deducted from my escrow? Is it a part of my down payment? Is it the same thing? So on this episode, we're going to get all the tea about what are closing cost fees, especially if you're looking to buy a house here in sunny South Florida. So you guys want to stay tuned. You want to tag people. I'm streaming it both live on Facebook and on YouTube so that both of my audience get a chance to get the information. So share, like, comment, and we'll be able to answer those questions for you. So let's go ahead and dive right into today's topic, you guys. Awesome. So I'm going to go ahead and bring up my boy, my friend, Alex Otero. Woo!
Hey, how are we doing, Mr. RoQuanda Guy? Thank you so much for allowing me to be on this webcam, this webinar. I'm loving it. Thank you for the opportunity to talk to you and everybody who's listening in on how we can help them know what we got to get done on closing costs and buying a home and the whole 9 yards.
I am so excited that you're here with me. So, Alex, I know you for over 15 years. So, go ahead and tell my viewers who you are.
All right, thank you. Well, I am Alex Otero with Paramount Residential Mortgage Group, PRMG. We are a direct lender with over 220 locations nationwide. I work out of the office in the Pembroke Pines, top 10 office in the country. And basically, I'm here to be able to always guide realtors and buyers in the home buying process. I've been doing this close now to 20 years. I'm my MBA, very situated with my education and ensuring that I'm giving the information correctly to all my clients and realtors to make sure they have a great experience on helping them move forward and purchasing their home.
I like that. I like that. All right, so Alex, let's jump right into it. Now, I get calls all the time, and I know you get calls all the time, and people want to know what the heck is going on with this market. That's the first question, right? What's going on with this market? And then when I do get qualified for a home loan, now what are the closing cost fees that's associated with it? And are those closing cost fees the same as a down payment? Is that amount reduced from the equity? So let's dive in. Let's give detailed information based off of FHA $300,000 loan, okay? So people have more of a realistic idea what to expect. All right, so my first question to you would be, when we say closing costs, when we use that term, I'm trying to get in the camera, term, closing costs, what does that actually mean?
Well, that's a great question, and I'm glad actually we're doing this because it's very important to educate and advise how that is. Every time I go over the numbers with my clients, I always make sure I express what closing costs are. Closing costs is a word that has a lot of different things underneath that word. I call it the closing cost umbrella because there's a lot of things that's associated with it. In retrospect, it's really not closing costs. So I'll give you a couple breakdowns. So first off, there's a lender fee that, of course, to do the loan, you have a lender fee, which is a closing cost. Then you have the title fees and the third-party fees that the title company would, of course, advise on how much it's going to be. Those are title fees. And then there are, really outside of that, there could be discount points, which is considered a fee, and there could be, title insurance considered a fee, of course. All those things are actual closing costs. Now, what's under that same name, closing costs, is something called escrow, and prepaids. Escrow and prepaids is actually the buyer's taxes and insurance. In retrospect, it's not actually considered closing costs because it's really their money that they're putting at the closing table. So it is something they do have to bring into the closing, additional funds they have to bring into the closing, but we don't consider it closing costs only because they're utilizing it for their own benefit, which is to prepay for their insurance for the year, which is to prepay for their taxes, to pay for their insurance. All those type of things is all situated and collected at the time of closing. So when we summarize and we basically say closing costs, I always like to break that down because part of what I do, of course, is educating clients so they understand exactly what their closing costs are. And the important part about that is breaking it down. Here's the lender fees, here's the title fees, and here are your escrow prepaid fees in that aspect. But that's really the breakdown when it comes down to closing costs.
Okay, so let me just recap, because that's the educational part of me. That when we say closing costs, that is an umbrella of different things that come together. So it's your closing costs, but up under that closing costs, you have different things. So now let's give them more realistically. You get approved through Alex Otero, PRMG, for $300,000. Now let's get down to the nitty gritty because people want to know this.
Yes.
So when we talk about the loan fees, what is an origination fee?
Okay, so origination fee is going to be pretty much what the actual mortgage company is charging. So we have what's called processing and underwriting fees. So ours, I'll be upfront, is $1,485, $1,485. So that is for processing and underwriting the loan. Now, there are circumstances where buyers would opt in to buy down what they call points, buy down their rate. So they would actually really buy down the rate and spend a little bit more money to be able to have more savings per month, and that's called discount points. So that
okay, let me stop you there. When you say buy down the rate, you have to realize that people have never done this before. So what do you mean by buy down the rate?
One more time. I'm sorry, I broke up, RoQuanda.
I'm sorry. Remember, we're talking to people that have never done this before. So when you talk about buying down the rate, what do you actually mean?
So buying down the rate means that when, let's say a person qualifies for 3.5, no cost to the rate. That's just what they qualify based on their credit, based on their income, and based on their down payment. That is actually their qualified rate, 3.5. Now, they can have the opportunity, and I always give my buyers the opportunity to buy down the rate. I let them choose. Where what they could do is, of course, pay, let's say, 1% of the purchase price, or excuse me, 1% of the loan amount to be able to buy down from a 3.5 to, let's say, a 3.25. So what happens is, let's say the loan amount is $300,000. Well, that's $3,000, but they're going to have a monthly savings from 3.5 to 3.25, let's say, of $70 a month. Okay, well, that's $70 a month that they're going to save, and it only costs them $3,000. So the way I make it make sense is I would ask that buyer, I'll say, okay, if you spend $3,000 extra right now at closing, you're going to save $70. So I say 3,000 divided by $70. That means in 42.8 months, which I'll translate that into years, in 3.5 years, after 3.5 years go by, you're officially going to save $70 a month going forward. Because if you plan on being on that house, let's say minimal 7 years or more, that's a significant amount of savings. Your savings won't happen right away because remember, you paid the extra $3,000 at closing to be able to save those $70. But once, as I just calculated here, 3.5 years go by, that's it. Everything is savings from that point going forward, $70 every month. And a lot of times when buyers have the inclination, of course, being in their property with 7, 5 years, 10 years or longer, it's worth investing into that extra funds at the beginning because of the fact that they put themselves in a position of being able to save in the long run. So that's what we call discount points. Now that, once again, just want to clarify, that is optional. That's not mandatory. That's, of course, something that I discuss with buyers, and I show them a rate sheet. I show them a rate sheet because it puts them in a position where they get to choose their rate. A lot of lenders don't work that way. Me, it doesn't matter because I don't get paid on rate, so I'm not going to worry about helping clients and showing them and being very transparent so they can see exactly what they would qualify for.
Awesome. Thank you for explaining that. So also too, up under the the loan fee itself, we have the origination fee, which you discussed, and then you also have like the doc review and the processing and the underwriting fees. Can you give us just a little bit more explanation of those?
Yeah. So once again, the breakdown of it all, it comes down to the underwriting fee and the processing fee. Our fee once again is $14.85. Whether your loan was $50,000 or your loan was $500,000, we charge the exact same. So that's our flat fee to do the actual loan in itself. And then that's once again from the lender aspect. You do add, if you are once again buying down points, you do add the discount points to, of course, so it add up. So that example we used earlier would have been 3,000 plus 1,485. So the total lender cost in itself in that example would be $4,485. Now, once we surpass the lender portion of it, then you're going to have the title fees. Now, of course, buyers have the opportunity of choosing their own title company, and pretty much whatever those title fees are, that's what we would be charged also at closing when it's all said and done. We get the final title fees when it's we finish the file, or we're getting toward the closing of the file. And we
Okay.
go over.
So when they have the choice of choosing their own title company, so that is an amount that they can basically shop around
Yes.
to be able to select the title. But that also
Absolutely.
varies. We have to talk about that. Is if you're buying a house in Dade County, Broward County, or Palm Beach County, because sometimes the buyers don't get to make that selection. Now in Dade County and Broward County, the buyers are able to select their own title company. But in Palm Beach County, the sellers are the one that make the selection. But again, that could be something that the sellers and the buyers can negotiate while they're in the process. So that's important to know, that you can shop around to find a title company that's going to give you great rates as well. So I have another question for you. As far as the origination fee and the doc fee and the processing fee, those are set fees, or do they vary from company to company?
Well, there are set fees with our company. 1485 is what we charge. So they would vary because there are different lenders that do charge different processing and underwriting fees. So those are things that would vary, of course, from lender to lender.
Awesome. Okay, thanks for explaining that. Now, the next thing that falls up under the closing, I'm trying to get in there, the closing cost is the loan fees. And then you also have the taxes. So talk to us about taxes. What are those?
Okay, so you have, all right, so let's talk about the taxes from what we call third-party fees. Third-party fees is, recording fee, transfer tax fees, and state tax fees. When people are buying a home in the state of Florida and also in the county, there are transfer tax and state tax fees that are applied. So, let's break it down into three areas right now. So we already established the lender fee. We already established there's a title fees. And then the title company is the one that finalizes the third party fees, because they're the ones who are actually going to put together how much the recording, transfer, and state tax fees are. So, but I still separate that because it is a third party fee, if you will. It's not title or lender related. It's a third party when buyers are purchasing in, once again, the state of Florida or in their respective county. So those fees are, of course, transmitted based on purchasing a house. Obviously, they have to record it with the county. So, of course, the new warranty deed, you want to make sure it's being recorded accurately with the county to make sure, being a new home buyer, your name is obviously accurately put on the county website. And then, of course, you have the state tax that has to be paid for. And then, of course, the transfer tax fees, because there are taxes that have to be transferred throughout. But those are, once again, situated as third-party fees. So that's the third part of the closing costs that's under that umbrella that's being charged as well.
Awesome. You did a great job in explaining that. All right.
Thanks.
So we talked about the closing costs. Again, I'm a teacher. Even with Sunday school, I like to recap to make sure everyone understands. So we have the closing costs. So when we talk about closing costs, we're talking about a variation of fees that comes up with that bottom line closing costs. And then that's usually broken down to like three different areas. The first one you talked about, which is the loan fee, which is your origination fee, your doc fees, the processor fee, the underwriting fees, the appraisal fee. And we didn't mention this, but the appraisal fee is paid ahead of time. So if a person
Yes.
does see that
Correct.
on their HUD or their closing statement, it usually shows that it was paid ahead of time. So those are one of the fees that it shows up, but it does show up that it was paid ahead of time. Is that correct?
Absolutely, and I'm glad you brought that's absolutely because I'm glad you brought that up. That you'll see it on the itemization on the closing disclosure. You'll see that the appraisal fee is on the right side of the column because those are already paid out of closing. It's called POC, paid out of closing. So when I initially talk to our buyers and letting them know how much it's going to be, typically it's going to be anywhere between 500 to 550 higher at the beginning because it's all included, right? The appraisal fee and everything. But then at the end, it's going to be the closing cost will be typically 500 to 550 less. The reason why I mentioned 500 or 550 because if it's a conventional loan, it's 500. If it's an FHA loan, it's 550. So either way, those two amounts or one or the other would be reduced at closing. So it'd be less because, of course, the buyer already paid for it at the beginning of the transaction. To, of course, get the value to ensure we can move forward and everything with the loan transaction and the purchase of the house.
All right. So just in case someone is just joining us, I am talking to Alex Otero, a long-term friend of mine. We go way back. I think the girls
Way
were,
back.
I think Rihanna was probably a couple of months old. And she's now, what, 13 going on 14. So definitely. And what I can say is that I've used Alex Otero and he has gotten me to the closing table 100%. I have not had a deal fall through using Alex Otero. I remember one time he said, we're on Lifeline. And I'm like, what does that mean? I'm not used to you saying that. But he was able to pull it out of the hat because Alex Otero is with PRMG and he is one of the top producing loan officers. And I also have to say his bedside manners is amazing. Last time we checked it, out of hundreds and thousands of reps within their company, he was ranked like number 35, Alex. So I'm really excited to be partnered with Alex. So, all right, so let's dive back into our topic of the closing costs. All right, so you guys, we are able to see comments. If you have questions, go ahead and put those in. We would love to answer those questions for you relating to closing costs or anything else while we have the professional on with us. So I'm super excited about that. So let's go ahead and let's talk about now the prepaid. You mentioned this a little bit, the prepaid and the escrow. Can we talk about that?
Yes.
Prepaid and escrow.
Okay, so prepaids, there's two itemizations on prepaids. There's going to be the insurance, because to purchase a home, the insurance would have to be paid for the whole year up front. So I'll give you an example. If the insurance amount is $2,500 for the year, the buyer can count on having to pay $2,500 at closing because the property has to be insured for the first year up front. So that's already going to be put into the closing costs. Once again, closing costs. So that's $2,500. Then there's going to be what's called the prepaid, prepaid or per diem interest per day. So if let's say you're closing on the 15th, let's say today you're closing, the title company and the lender, us, what we're going to do is we're going to hold 15 days of per diem interest because you take ownership of the property as of today. So the per diem interest is per day until the end of the month. And then what ends up happening is that's why the first payment for that buyer, and then new homeowner, I should say, wouldn't be, if we're talking about April 15th, the first payment wouldn't be due until June 1st because 15 days, which would be from April 15th to the 30th, would be collected at closing. So once again, the homeowner is official, or the buyer is officially now the homeowner, taking ownership as of today. And then because 30 days of interest has to pass before the first payment's due, that's what's called deferred payment. So then there's no payment due in May. That's why the first payment will be due in June. So they have that deferred payment once again going forward. And then, of course, the first payment going forward and every month after that would be June 1st, and therefore every month going after that. So that is on the prepaids. Now, the other thing I failed to mention is flood. So not everybody's going to have flood insurance. So that's going to be depending on the property you're buying. If you're in a flood zone, that also would need to be prepaid for the year. Flood insurance, depending on the area, typically is very low. I can just give you a very general range. I've seen them as low as 300 for the year to all the way up to 1,200 for the year. So it's typically, you know, very low in that aspect. But once again, based on the topic we're on, it still has to be paid for upfront for the year. So now that's the section called prepaids. Now that once again falls under, it's not closing costs, it's not cost, it is prepaid. It is your money you're prepaying to make sure you have insurance coverage so you can be able to obviously own your home. Now, the second part to that, you'll see itemized in the closing disclosure, is something called escrows. So this question I always like to go into detail because my buyers always have that question, like, Alex, but if you're holding more on the escrow for insurance, I just finished paying it. Why am I paying it twice? So it seems that way, but it's not when you look at the calendar. So I'll give you an example. Buyer A just bought their house, they're closing today, April 15th. Their insurance is going to be covered from April 15th, 2021 to April 15th, 2022. So a whole entire year, you're covered, obviously, the insurance. Now, us lenders, we're going to hold, I'm talking only about the insurance portion, we're going to hold 3 months for the insurance. Also, so not only are you paying a whole year in advance, we're also going to hold 3 more months. And here's the reason why. Because first off, Matt finished talking about that there is no payment in May, but May still has to be collected. So we're going to hold 1 month. So out of the 3 months that we're holding, so I'll give you an example. If we're using the $2,500 a year premium for the insurance divided by 12, that's $208 a month. So we're going to hold those 3 months, $208. We're going to have it because that's going to be for May. Because remember, the homeowner is not going to make the payment for May, but we still got to hold that month, and it will make sense in a second. Then we hold 2 more months because we always want to make sure there's a cushion, making sure that there's always more than enough in your escrow account to ensure that you never go lower. Let's say 2-3 years down the road, the insurance carriers, you know, like insurance is all, you know, we can do, unfortunately, their premiums sometimes go up. So what happens is the lender never wants to make sure that the homeowner is short in their escrow. So we hold an extra 2 months. So here we go. We got 3 months that we're holding. Now, when the homeowner makes their first payment in June, we're going to count it out. They're going to make their payment in June, July, August, September, October, November, December, January, February, March. Here we go. April comes due. Now, where's that money? How are we going to pay the insurance again for the following year? It's going to be because you've been paying for it every month that same year. You've been paying for it, and that's to pay for 2022 to 2023. And then you're going to do it again. And you're going to pay that whole entire year, and you're going to be paying. So basically, insurance with escrows, you're always paying a year in advance. Now, with property taxes, that is a little different. Property taxes are paid when due. From my understanding, every county is due in November. So now in November, when the property taxes are due, at this stage right now, we're collecting 7 months. So at closing, let's say once again, going by the same example, today's closing, we're going to hold 7 months of taxes. So let's give this to a dollar amount. Let's say the property taxes are $4,000 a year. I'm going to divide that by 12 months. That gives us $333 a month. We lenders are going to hold 7 months of that. Why? So that's $2,331. So remember, this is all, once again, this is not closing costs. This is prepaids and escrows being held for you to make sure, or for the lender to make sure that the tax and insurance are paid for every month. So the $333 that are being paid times $2,331. The reason why we collect that now is because your first payment is due in June, right? So remember, we have 7 months right now that we're collecting at closing today. We're collecting 7 months of that. Now your first payment's not due until June. So you got 7 months. June is 8 months. Remember, when you make that payment, a portion of that payment is going to go to your escrow bucket. So you have 8, which is June, 9, which is July, 10, which is August, 11, which is September, and 12, which is October. So when November 1 comes, you have your 12-month pay. So that right there ensures that your property taxes, you're going to have enough. We've collected enough to make sure that when this November comes, the mortgage company is going to be able to write a check to the county to make sure your taxes are paid for. Now, at this time of the year in April, because it does vary depending on the month you're closing, at this time in April, that also means that the seller is going to give you a credit automatically by default. Why? because you haven't owned the house since January 1st. The seller has. So the seller would give, and of course the title company does, and the mortgage company, of course, does these calculations where they're going to give you that credit from January, February, March, and April, if you will. So 3.5 months, they're going to give you credits of those taxes because we are collecting it to ensure that we have a whole year. However, those 3.5 months you weren't living there, so then typically you're going to get that as a credit at closing from the seller because the seller is the one who was responsible for those taxes from at least January 1st to the day you close. And that right
And
there,
that
my friends,
credit,
is
that's so they can
how
understand
it
that
goes.
that credit will be shown on that statement, the preliminary statement, the
Yes.
HUD statement
Yeah.
that they would
Absolutely.
get, and numbers that you would go over with them,
Mhm.
so they know what those costs are when they get ready to come to the closing table. Now, we have
Exactly.
to have another conversation about this on another broadcast possibly, but I want to talk about, so that you know, you can remind me. That when a person is looking for a home and they're looking at the taxes of the home and they see that the taxes are $2,000, and then when the new year rolls around and they file homestead exemption, that their taxes is not going to be $2,000. So a lot of times people don't understand the fact that that owner previously lived there and they capped, and their taxes are going to be different than your new taxes. And we will talk about that in another video because that would fluctuate their payments,
Yes. Yeah.
possibly, correct?
Absolutely. And yeah, we'll definitely talk about that in another video, but just to shine one quick light, lenders qualify based on current tax rules. So whatever the taxes currently are, and I've had clients benefit from that when the taxes are low because that seller
Yes.
had been in the property for so many years. Some buyers have to pay a very high amount of tax right from the get-go because that seller never applied for homestead exemption or just bought the house a year before. And the tax rule is a little bit higher in that aspect. So it does vary, but we'll definitely talk about that in another session because we got to talk about obviously homestead exemption, applying for that because it's a primary home. And there's a lot of things we could go into more details on the time frame on when those taxes should be changing.
Exactly. And I have a video on homestead exemption so they can watch that as well.
Awesome. That's
All
awesome.
right. So let's go ahead and just wind this up and just let's recap. So we
Mhm.
know that when we talk about closing costs, there's a lot of different factors that's added into it. We're talking about the origination fee, the doc fee, we're talking about the processing, we're talking about underwriting, we're talking about appraisal, we're talking about flood that we briefly talked about. We're talking
Mhm.
about taxes, recording fees, and transfer fees, and state fees, and then we're talking about the prepaid and escrow as well. Now, when we have that bottom number, and again, it varies from person to person. We're talking about a $300,000 home in South Florida. What are they looking for an estimate? Because we don't know, but just like a giveaway for closing costs, what would that be
Absolutely.
if they're
Let's do
looking
that
at
exercise.
purchasing a $300,000 home?
Absolutely. I'm looking forward to doing this exercise. Okay. So I know I talk fast sometimes, so I'll talk as slow as I can because I want everybody to get this down packed. I'm going to go over everything right now. I'm going to basically do a summation of what we just spoke about, but I'm going to include down payment. Okay. So we haven't talked about that yet, but I'm going to include down payment now. So down payment, here we go. So you have a purchase price of $300,000. And I know for this example, RoQuanda, we're using an FHA program. Okay. So 300,000 times 3.5%, which is the minimal down payment for an FHA loan at 3.5% is $10,500. Okay, so what we're going to do is we're going to write down 3.5% of 300,000 is $10,500. Now we're going to write that once again as a down payment. So I'm then going to add in 1485. I'm going to use, of course, our fees, which are fixed fees, is $1,485 once again for processing and underwriting. Okay, so that's for PRMG, my company, to do the loan. Then I'm going to just obviously guesstimate for right now when it comes down to the title fees and the third party fees. Remember, the title company is in charge to being able to allocate the funds for not allocate the funds, but to calculate the funds for the third party. Once again, when we talked about the recording fee, transfer fee, and state taxes.
Alex,
So yeah.
I'm sorry. A viewer just said that you're breaking up. They really want to hear what it is that you're saying. Do you have like earplugs or something that they can really hear what you're saying? They want you to
Let me see.
explain what you're just saying. Do you have earplugs or something or? Just want to make sure they get the information. If
Okay,
not,
absolutely.
just go
Let me
ahead and
see if
repeat
I
what you're saying. You're
can.
sounding good now, but you were
I'm
breaking
sorry.
up and they could not hear what you were saying.
Okay, fair enough. Let me go back real quick. Let me see cam mic. Okay, so it should be there. All right. Okay, let's try it again. You can hear me good now? Okay, perfect. So I'll actually circle back. So to start from the top, a buyer is purchasing a home for $300,000. They're going to put a minimal down payment for 3.5%, which is $10,500. Okay, so that's already $10,500, which of course is not considered closing costs. It's your money. It's the buyer's money that they're putting into their own home to obviously purchase. Then we're going to start with the lender fee. So as we already discovered, it's $1,485 for our processing and underwriting fee. Then we're going to go next to the appraisal. Appraisal is, in this case, $550. So $550 is for the appraisal. So I'll put that there as well. For an FHA loan, it's $550 for an appraisal to do. Of course, buyers will get a copy of their appraisal as well. Then we're going to talk about the title fees. So once again, the title fees I am going to overestimate just because I don't like to underestimate. And all my clients and realtors know I rather overestimate than underestimate, because I'd rather you come into closing knowing you have to be actually bringing in less than what you thought than come to closing and bringing in more than you thought. So I would overestimate on the $300,000 purchase the title fees and the third-party fees of approximately $6,000 in total between both line items. I'm going to add $6,000 right there. Title, third-party fees. Okay, perfect. Now we're going to talk about, so right there, I'm going to stop for a second and I'm going to finish that section right there. So I'm going to add that up, $1,485, $550, and then $6,000. So right there is $8,035 of actual closing costs. Okay. Now I'm going to break down and create another line, which is now what we've been talking about, your prepaids and your escrow. So we already know if your insurance is $2,500 prepaid, because you're paying your insurance for the whole year up front, and let's say $400 for the per diem interest because you're closing today, mid-month. So that's $2,500 plus $400. So that's $2,900 for prepaid insurance. Now for the escrow, we're going to hold 208 times 3, and then we use the example of 33. So let me do a little calculation here. Escrow, and then 7 times 33. So 2003. Okay, so what I calculated just now was the escrow. Now we're going to hold for the insurance, those 3 months we were talking about earlier, and we're going to hold the 7 months for the taxes that we were just talking about earlier. So when I add those, and I add it all up together, $2,900 of prepaying the insurance, $624 for the 3 months of escrow for the insurance, and $2,331 for the escrow hold for the taxes. All of the prepaids just came out to $5,885. So right there, I want to be very clear. I'm going to stop for a second. $5,855 is not closing costs. It's under the umbrella name closing costs, but it's broken down to it's for the buyer. The buyer is prepaying for their escrow, for their taxes, for the insurance to make sure it's always paid for every year going forward. Now, the beauty about this is that it's only done once. Once you do this, when you purchase your house, you never have to do that again. All the buyer will be responsible for is making 12 payments a year, and their taxes and insurance will be paid for this time going forward until they sell the house or refinance or what have you. But they have that mortgage and they never have to worry about paying any lump sum ever again. Now, let's recap one more time. So now I'm gonna add everything together, right? So we're gonna add our down payment, $10,500. We're gonna add the closing costs. Once again, it's built up with lender fee, appraisal, title fee, and third-party fees, which we said was $8,035, overestimated. Now we're gonna add $5,855, which is your escrows, your prepaids, everything. So right now I came up with a total of $24,390. Okay, so now let's start taking, now that's the debit, as I like to tell my clients. That's the debit, that's the amount that you have to pay. Now let's start taking away the credit. So the credit, which is $550, has already been paid for. Remember, at the beginning, you're going to pay for the appraisal before the closing. So that $550 goes away. So that 24,390 minus 550. Now you're down to 23,840. Now we didn't give an example at this, but I'm going to throw it out now. We didn't talk about making a deposit. So of course, when a contract's being accepted, or I should say a contract's being offered, the buyer's realtor and then of course the seller's realtor want to make sure that there's some skin in the game, right? So the buyer is going to put, let's say, $5,000 as a deposit. That deposit's only for the title company to hold in the interim of when for the time the transaction is being done, from the time of contract to the time of closing. That $5,000 is just in the escrow account with the title company, just being held until the transaction is done. So let's say they held $5,000 in deposit at the beginning. So now that 23,840 minus 5,000, because that 5,000 has already been given. Now at closing, the buyer would need to only come to closing now with $18,000, my math there, $18,840. That would be what I would then tell the client, here is your cash to close. This is the final you would need to wire to the title company, which is $18,840. And that's pretty much, in a very short way of explaining. That's what it looks like.
That was amazing to be able to break all that down, to be able to explain. Now, my question to you is that most people don't have the $18,000, which again, we're saying the $18,000 is your down payment of the 3.5% that you're required to pay, plus your closing cost fee, which is a mixture of fees that we just discussed. And that's how you come up with the total amount that need to be wired to the title company. So if an individual don't have that money up front, but they may have access to it, can we talk briefly about ways that we can have people to help them with that $18,000 for closing?
Absolutely. That is in a form of a gift. I'm a father, and my daughter needed some money to be able to buy her first house. What I can do is I can gift her those funds to be able to buy her the house. If I'm my parents, if I needed, once again, going backwards, I can have my parents give me funds. I can have my brother, my sister give me funds. There's a lot of different ways where family members can definitely help other family members gift funds. So collectively, they're all buying a house, right? So collectively, they're helping each other be able to buy a house. So that's definitely one way of being able to do that. That's what we call the gift of funds, to be able to utilize that. The other thing, of course, is once again the minimal down payment, because a lot of times, especially in conventional loans, you have to do 5% down. So if you are a first-time home buyer, conventional, depending on your credit score, can allow you to put a minimal 3% down. And then FHA all across, whether it would be the first time buying a home, as long as it's your primary home, you can put only 3.5% down. So that's always a benefit in itself on being able to put a minimal down payment so the person can go in and purchase their home overall. Now, I don't want to go on too many tangents, but I know someone's going to say, Alex, I've heard the closing costs been able to be financed. So yes, that's true. Closing costs can be financed only through a refinance, meaning the person already owns the home and they're refinancing their home. So those closing costs are built into the new loan, so the homeowner does not have to pay any closing costs out of pocket. The only thing they would pay for would be the appraisal, because we do need a new appraisal, but that would be the only way, because I know there's a lot of misconceptions, and it's actually recently I've been hearing a lot of that you can finance the closing costs. And unfortunately, that not for a purchase. For a refinance, yes, but not for a purchase.
Awesome. Thank you for clarifying that, because actually my sister-in-law and I were talking about that yesterday. So that's another video. See, we always have topics for videos.
Yeah, we do.
All right. So another thing is that we can have the money gifted. So we're talking about your down payment that's required for you to pay, which is the 3.5% in this particular case, in this incident we're talking about, plus your closing costs. So you can have money gifted from immediate family members. I think we should talk about that you don't want to move around a large amount of money. In the process, it's very important that you're continuously talking to both your loan officer and your realtor throughout the process. So that way they can help you and know what you need to move around, when you need to move around. And in most cases, they don't have to move anything around, because if that money's being gifted to them, that money's being sent right from the person that's gifting it to the title company. So that money in most cases is not even touching the buyer's hands. Is that correct?
That is absolutely correct. Yes. That's pretty much the best way to do it. We just have the money directed from the person, the donor's account, directly to the title company. It's just documented on how much. So I would say $10,000. Then we know $10,000 is going to come out of, let's say, a brother's account, directly to the title company to help with closing costs for the sister, the brother, the mother, or the father.
Okay. Awesome. And then other things that we can talk about, we said briefly, just to recap, is that, some of those fees can come down when you start shopping around and looking for a title company and looking at prices and seeing where you can receive a deal to be able to help. But in most cases, those costs are fixed.
Yeah, for the most part, every title company is different. But let me kind of give my disclaimer, right? I want to give a disclaimer. So the disclaimer is that's not that 18,000. What's left? Because in reality, the whole amount was really 24,390. But what's left after the deposit was about 18,800. That's just on a very general purchase with overestimated fees and at a $300,000 purchase price. So of course, if you're buying a home at $200,000, you could expect that the closing cost obviously is going to be a little less than that at that point as well, the money you need. So every case is always going to be different, no matter what. Every person's situation is always different. One thing I hear all the time, 18 years in this industry, is, my neighbor, my brother, my sister, my aunt, my uncle, they got this, they got this, they got this. It's always different. It's like you go to a doctor, a doctor is going to give a person, one bit of information because of their blood type, their body weight, their height, weight, and everything like that compared to somebody else. It's all the same. We look at credit differently. Income is different. Debt to income ratio is different. The down payment's different. All those factors plays a huge part. People say, my neighbor got this rate and I'm getting this rate. Why is that? Because everybody's scenario is different. So it's always best to not compare. It's good to have an idea. That I'm never going to deny. It's always good because I always ask my neighbor, hey, what'd you get? So it's always good to have an idea, but never put yourself in a position where, something's wrong because they got this and I can't. Or I'm not getting that. There's always that scenario, once again, where everybody's different. And when it comes down to, once again, their credit score, their liabilities on their credit, their amount of money they're putting down, and also their income, that's income ratio, their employment history, all those type of things plays a part.
Those are great points to bring up because people do talk about it. And then I hear it all the time, why is it that my amount that I have to bring to the table is so much more? So those are great points to bring up. So Alex, I just want to say Thank you. I know we are over time, but I just want to say thank you for your time. I think this is valuable information that people ask me all the time, that they ask you all the time. And I just wanted to bring it to my platform so people can understand that a down payment is completely different than the closing costs, and that the closing cost is an association of different types of fees up under the umbrella. So you have your loan fees, your taxes, your prepaid, and your escrow. And that's how you come up with the cost that you wire to the title company for the closing of your home. Do you have any final thoughts or anything that you would like to add to my viewers before I'm looking for the thing to give your name and phone number?
I have to appreciate it. I have to sign off and just say thank you for this, because let me tell you, even if one person can gain a little bit of knowledge in what we're talking about to help them make that decision of buying, this is so worth it. And I applaud you, RoQuanda, on getting something like this done, because education is key. You and I both come from education backgrounds, education employment, so we understand the importance of education and knowledge and understanding how it all works. We're definitely here for everybody to ask any questions, to continue picking our minds and how this all works. And most importantly, this is the market. This is the market, guys. If you're going to ever buy a house, now's the time. Rates are still historically low, even though the news is saying rates are going up, which they are. Rates are going up, but it's still low. Having a rate at 2.7 and a rate at 3.5, let's be very clear, it's still low. So take advantage of that. The market is out there. The main thing right now is just seeing what you qualify for. You know, stop wondering if you qualify. Rip off the Band-Aid. Find out 100%.
Yeah.
Yes or no.
That's the biggest thing is people are afraid. And a lot of people go by Credit Karma to be able to make that decision if they qualify for a loan or not. So I tell them the biggest thing is having options. And once you have options based off of knowledge. You can't make an informed decision if you don't have all the information and the knowledge. And then once you have that, then you're able to say, okay, this is what I need to do to work on my credit, or this is what I need to do to move forward. And then without that, you can't. So reach out to Alex Otero, regardless if you're looking for a first-time home loan, if you're looking to upgrade, want to upgrade. Hey, I like upgrading people. So they're ready to upgrade from their single family home to a bigger home because their family's growing, or they're looking to refinance. Refinancing, you do not need a realtor, but you definitely need Alex Otero. So you guys reach out to him. I am so thankful for you, Alex. Many blessings, and enjoy the rest of your day, my dear.
Thank you so much, RoQuanda. Always a pleasure, and we'll definitely be in touch soon. Thank you, everybody.
Awesome. All right, you guys. So that was Alex Otero. I am so super, ooper, duper that he was able to give us some of his time today. You guys, if this is your first time on my channel, please go ahead and like and share. Feel free to comment. I promise I'll go back through and I'll answer your questions. If I don't have the answer, I have Alex on speed dial, and I would love to get all of those questions answered for you. Go ahead and hit subscribe. And if this is content that you would like to see on a regular basis, I'm going to ask you, if you are on my YouTube, to go ahead and hit the bell so that you can receive notifications each and every time I do videos and content like this. Like I said, my goal is to educate both buyers and sellers so they can make informed decisions that's best for them and their family. Until the next video, you guys, be blessed and have an awesome and amazing day. I'm RoQuanda Guy with EXP Realty. Bye.